Hi, it's Tim Quast for Market Structure Edge. And you, no doubt, if you have used the Edge platform at all, have noticed key behavior. Here on the dashboard visualizations, it's listed as leading behavior, but we're just shortening it so it doesn't bleed over. So that you'll notice, for airlines, it's fast trading. I've got a group that I call Benzinga Fast Trading, Cloud Computing Fast Trading, Communication Services is fast trading, Consumer Discretionary Fast Trading, on it goes. And then down here in energy, also fast trading. Boy, it's everywhere. Go down to financial, same thing. FANGs, active investment. See that? Well, what does that mean? What is that behavior? Well, let's click through the FANGs, and you'll see it here inside the portfolio that for every component of your portfolio, you will see the key behavior, and you can sort by that. So there's active, fast, passive, risk management. Those are the four big behaviors. Well, what are those? Let me give you a little background, and I can explain this. But as ever, you can go over here and click this question mark, and it will give you the definitions of those key behaviors there. What is it for? What purpose does it serve? Really, this is informational, so you can understand the kind of money, the purpose and time horizon of the lead behavior. It's not the only one, but in a time priority stock market, which ours is, by which I mean the price is determined by time, by its arrival at the best price. The first thing to get to the best price gets to set the price for everybody else. And then behind that, there will be an effort to become more or less of the underlying volume. And those two things comprise 100% of volume. The first part of that, the one wanting to be the best price, that's marketable trades. They're trying to be the best bid and offer or between them. And then non-marketable trades are ones trying to take advantage of how that changes over time to fill their orders. But those behaviors have different purposes and time horizons. So let me give you a little background on this. This comes from the parent company, in effect, the sister company, Modern IR, the leading provider of quantitative analytics to US listed companies, that I started in 2005. And so it was predicated on behavioral analytics, measuring the different kinds of money setting price. And so we've had that long, here it is 2020, we began work on Market Structure Edge in 2019. But all through this, see, we have behavioral alerts, we've done all kinds of things to help public companies understand what kind of money is setting price. Now, why would we do that? Well, because look what has happened in the equity market. There's been a massive shift away from stock picking toward just putting money into an index fund or an exchange traded fund. Well, that is quantitative or passive behavior instead of stock picking predicated on underlying corporate fundamentals. All kinds of factors determine those allocations, but they're only in part fundamental. They're not stock picking, they're putting things in baskets with shared characteristics. And so that affects the way we think about the market. There is active stock picking, active investment. It's going to focus on the story, what makes a stock unique. Passive is the exact opposite. It says what makes this stock similar to other things where we can have a basket of shared characteristics. It wants to be the benchmark. This money wants to beat the benchmark. This is much easier than that. And so that has prevailed. Then you have fast trading, machines that are providing shares to the market, perhaps by borrowing them, running around, changing the price, fragmenting trades. That is the biggest force in the market now because of the rules that govern it. And then you have counterparties to leverage or protect trading with derivatives. It's taking or managing risk. And so those are the four big pistons. Sure, there are a lot of subsets, like you could say, well, what about statistical arbitrage? What about latency arbitrage? How about index arbitrage? Well, those are all forms of the same thing. And so this is how we look at the market. So let's come back to the dashboard. So you can know at all times what prevalent money the last 5 days is driving prices up and down or changing sentiment. It is not highly correlated to performance like market structure sentiment is 94% of the correlation, and a couple of additional points here thereabouts to understand predictive capacity, but this can really inform you about the movement of money. Going back to the dashboard, I think it's particularly helpful to look across all of your portfolios. You'll all have at least 12 of them. and then you create your own, but you're going to have sector portfolios and then the FANGs and then whatever you create on top of that, and to be able to look across that and see, well, where is active money going? What is being led by fast traders who don't want to own anything? Is passive money moving into or out of something? Well, you can scan across here and see that, and that really is why we track key behavior, and that's what it is.